Problem 9.5 is statement of changes in owner's equity. So again, we're talking about financial statements. And the who, the what, and the when. We are Wilderness Rentals. It's statement of changes in owner's equity. And again, it's for a period of time. So the month ended September 30th. We start with beginning capital. Okay, if you look on your worksheet, the beginning capital is $12,760. Remember, you have to back out the $500 investment from the owner. So the $12,760 is less the $500 investment by the owner, because we're going to add that back in. So we can either add or subtract the owner's equity. We're adding the investment, we're adding net income. Because we have two, we'll put them in the first column, and that is the increase in our capital. So we add the $500, the investment by the owner, we add the net income, both increase capital. So we add them together, get $2,312. We don't have a name for that, so the subtotal when we add is $15,772. And we only have one subtraction, the withdrawals by the owner, $700. Subtracting gives us an ending balance of $14,372. So for our classroom purposes, when we add and subtract, we're only going to have investment by owner, withdrawal by owner, and either net income or net loss. So either the addition or the subtraction is only going to be one number, and they'll be in the second column. Now, that number, 14,372, is very important when we go to the balance sheet. Nothing changes in the balance sheet but our owner's equity from the income statement. So again, the who, the what, and the when, we're Wilderness Rentals. It's the balance sheet. And this is as of a date and time. So the date is September 30th. We have our assets, our liabilities, and our owner's equity. We're listing our assets in column 1 and the total assets in column 2. We single rule to find the total assets, and we double rule to show our total assets. Fundamental accounting equation says assets equal liabilities plus owner's equity. So we have total assets of $18,699. Our liabilities, there are three of them. We put them in the first column, single rule. And our total liabilities is $14,327. Now, our owner's capital is changed from our worksheet. So our magic number that should make these equal is our $14,372. That's what we're going to put for our owner's capital. It is changed, and that's what will make my assets equal liabilities plus owner's equity. So your balance sheet should look like this, with a change in the capital to bring the permanent accounts up to date from our temporary accounts. So my assets now equal liabilities plus owner's equity. Okay, the current ratio, we're talking about our current assets to current liabilities, $7,880 divided by the $14,327. Okay, our current assets would be the cash and bank, the accounts receivable, and the office supplies. $7,880 divided by the $4,327 gives us about 1.8 to 1. Okay, again, how quickly I can convert my current assets to pay off my current liabilities is what we're looking for with the current ratio.